Welcome to the Surviving Financial Crisis webinar. I'm Julie Miles. Transformance seeks to help members of our community find practical solutions through financial education because knowledge enables and empowers you to reach your hopes, wants, and dreams. In this section today, we hope you gain some lessons to enable you to help yourself or someone you are concerned about survive and cope with financial crisis. Before we get started on the webinar, let me say a few words about our agency and the service we provide. Our mission is to empower individuals and families to achieve financial freedom. Our programs have positively impacted 1.7 million lives in our 42 years history. Our program offers include credit and budget counseling, financial education, student loan counseling, and in addition, AIM program, C2 Safe program, housing counseling, as well as debt management, bankruptcy counseling. As a United Ways of Metropolitan Dallas founded agency, Transformance joins a network of 43 programs focused on providing a pathway out of poverty. Let me tell you a little bit more about how our agency helps individuals reach financial stability through the story of one of our clients. Ben came to Transformance several years ago after experiencing an expensive divorce, living out of his car and paying for all of his expenses with credit cards. Through Transformance budgeting classes, Ben was able to learn how to live within a budget. Through a debt management plan, Ben was able to pay off his creditors in a reasonable and responsible fashion. After learning how to budget and clearing up credit issues, Ben went on to run several successful companies and is now a leading pillar of the community, having served the pleasure of 2 U.S. presidents. Financial crisis can come in many forms and is unfortunately often unexpected. One of the best things you can do gather some back knowledge and understand clues to look out for. With that understand, we will cover the following topics today. Financial crisis defined, credit facts, and tools. What are emergencies? An emergency is a sudden, urgent, usually unexpected occurrence or occasion requiring immediate action. Some emergencies not only take an emotional toll, but can cause a financial impact to your wallet. In this webinar, we will discuss the top 5 emergencies that people experience which can cause a dramatic impact to your personal finances. By identifying and being aware of some of the most common emergencies, you can put a plan in place to help ease the financial impact to your family. There are several options available to you, and we will discuss those and allow you to make the decision to implement them in your situation. These emergencies are job loss, medical debt, death in the family, divorce, natural disaster from a fire, flood, or tornado. The best way to determine the impact is to become very familiar with your credit report and credit file. We will talk more about this in the slides upcoming. The Consumer Financial Protection Bureau should be utilized to determine incurrences in your credit file, request updates, and register any complaints. Above all else, acting financially prudent will help you gain hold of your financial situation. FICO scores are calculated based solely on information in consumer credit reports maintained at the credit reporting agencies. There is an inverse relationship between credit score and credit risk. In other words, it is much riskier to lend $5,000 to Bob with a FICO score of 590 versus Jenny with a FICO score of 770. Each individual actually has a various credit score from FICO scoring model because each of three national credit bureaus, Equifax, Experian, and TransUnion, has its own database of individual credit history. Buying a home, a car, or applying for a credit card lender want to know the risk they are taking by lending you their money. FICO scores are the credit scores used by 90% of top lenders to determine your credit risk. Your FICO scores can affect how much money a lender will lend you and at what terms, mean interest rate. Higher FICO scores can often help you qualify for better rates from lenders, which can save you lots of money. This chart can serve as a guide for how to increase your score and also to show you the score might have originally taken a hit. Paying bills on time is obviously very important. As 35% of credit score is made up by payment history. Shown in the CFPB report, one of the greatest obstacles that the credit reporting bureaus face is accurately matching individuals to credit records. It is best practice to remain vigilant about your credit report by obtaining a free credit report annually from each credit reporting bureau. Follow the steps in the CFPB's credit report checklist. Goal setting is a great way to start kids on the road to create great financial decisions. Getting a child to think about what he truly wants will help build confidence with money and more generally down the road. What you get, by the way, this quote is by Zig Ziglar, what you get by achieving your goal is not as important as what you become by achieving your goals. Goal setting is the first and most important step towards financial security for families, couples, or individuals. Setting your goal with kids will help you know what to spend on and save for in your budgeting process. To truly overcome financial goals, it will help to set milestone goals to help you build your finances. Use these steps to ensure that your family is aligned in that your goals are shared. Individuals that email us will be sent the CFPB version of this form. Using the cash flow budget will help you make sure you have the money you need when you need it because tracks and categorize income and expenses week over week. Cash flow also helps you save for bigger expenses. In addition to inflow and outflow of money, it is important to consider the bigger picture. Focus on emergency savings with a goal of 3 to 6 months emergency savings. Then work towards other financial goals such as college savings, retirement, buying a home, or starting a business. The best practice to prioritize saving is to consider saving as a monthly expense by determining the amount you can save for each goal every month after your monthly expenses and adjust if it's necessary. For individuals that qualify, Transformance has a great program to assist you with your savings really. AIM is a match savings designed to grow your income while you grow your financial education. With the enrollment in AIM savings program, you also have access to free counseling and financial education. To be eligible for this program, participants need to live in Dallas, Collin, Rockwell, and south of Denton. Clients' annual gross income need to be less than $56.80. Transformers is proud to bring you Package Change USA, a mobile and desktop application that helps individuals and families keep track of their finances. PC USA can be a powerful assistant to remind you along the way to complete steps toward your goal and allow you to learn, plan, and connect. Through this tool, you can learn, plan, play, and connect with within the application or put you into direct contact with a certified coach who can assist you further. Thank you for attending Surviving Financial Crisis, and I hope to talk to you in the next webinar.